Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Midweek Takeaway. Today we're joined by Robin Brundle and Alex Stanbury of Technology Minerals, and also guest investor Keith Hinde. Welcome all.
Hi, nice to meet you.
Good afternoon.
So before we open up this to this investors Q&A session, let's just look at the latest news from TM1 regarding the securing of a £5 million convertible bond facility with CLG Capital. The facility consists of floating rate 24-month convertible bonds subject to a 40-day lock-up period with conversion into ordinary shares at a price of 95% of the average of the VWAP of the shares on selected trading days. The facility is initially for general working capital, supporting the ramp-up of Recyclus' lithium-ion battery recycling plant in Wolverhampton, where TechMins owns 48.35% of Recyclus. CLG will also receive warrants based on the notional value of each tranche, specialising in structured transactions to high-growth companies. Alex, do you want to just talk us through the rationale and when you expect you might draw down the first couple of tranches, please?
Yeah, absolutely. Well, the rationale behind it is to have a solid working capital facility in place. We did have a previous CLN in place, but we believe this one is a much better deal for the company and for the shareholders. So in terms of the reasoning for it, we have a reverse takeover on the horizon, as you know. To meet certain criteria, we need to have an 18-month clean working capital statement. Well, that's what we want. It needs to be 12 months. We're going to have 18. And so we need to show certain things. One of them is the access to capital to run the entire enlarged group. And so having a facility like this in place that we can draw at our discretion means that we can meet that and get this reverse takeover done, which is absolutely key to the growth and expansion of the group.
Okay, great. So I'm going to hand over to you now, Keith. Fire away. Choose between Alex and Robin as and wish, and if both of them need to answer, then go for it. And if you need us, shout. We'll be here.
Thank you. So I'm in the TM1 Telegram group, and we collated a group of questions from a number of the investors within the Telegram group, and we've grouped them into 9 different categories. So the categories are funding stroke business model, black mass refining, feedstock, RTO, warrants, lead acid, portable trucks, halo boxes, and lastly, the double battery strategy. So obviously the big issue to start off with is what you touched on already, which is the new CLN, which is being announced. So if I read out the first few questions, and then either Robin or Alex can maybe give us a bit more background to it.
Sure.
There was an expectation, based on the interviews carried out last year, that once we got into 2024, the news flow would be much more positive. Today's news has not been well received by the market. Please can you expand on the reasons for the additional funding and why a CLN was chosen?
Okay, got to remember where we started, I think. In terms of having this facility in place, we are looking to get cash flow positive as soon as possible. But it's no secret, I think we were looking to raise some capital a couple of months ago. It started to look disadvantageous to shareholders at the prices that were being spoken about. So we decided to drop that, and we just decided to focus on a new long-term CLN structure. We have a 40-day lock-in there so that it can't. It's not only about not being able to sell, it's also not being able to convert. So we get more time between draw and conversion to implement our business plan. We've had very sort of full discussions about the way that the sales will be conducted and to make sure that there's not a downward selling pressure on the stock. So yeah, we feel this is a very good option for the company, and without having to take equity at what was a considerably lower price when we were looking earlier in the year. Obviously, the idea is to become cash generative as soon as possible, and the business model is very cash generative. But we're now at the stage where we're implementing that business model and getting the feedstock through. There are various reasons it's taken a while. The guys with the really large feedstock, people like the OEMs and the car dealers, and these are very large organisations that need to be dealt with, very slowly and very professionally. They don't sign contracts overnight. They want to make sure that we are who we say we are. There's been a lot of greenwashing in the industry where people have had, they've sold, people have been paid to take away batteries, and then they've stockpiled them or landfilled them or discarded them or gone bust, and then the warehouses have been discovered and the batteries have ended up back with the original owners because they're still batteries and they still have the end of life producer responsibility for those batteries. So people are extremely cautious about who they deal with and how they do it. So they come to site, they come and do a site visit, they come and audit us and audit our processes, and then they start doing trials. So yeah, that's where we are at the moment. We're doing trials with people. We're getting feedstock through the door. We're signing up, as clients as we go forward, and we expect that to build through Q1. But these aren't things you can hurry. You can't sort of look desperate and you can't demand the batteries. We know there's a lot of feedstock out there. We are the only industrial scale recycler in the country, and there is pent up demand, but it doesn't mean to say it all just arrives at your gate. People are being charged money to bring us those batteries, and they need to make sure that we can do our job. So yeah, it is a case of building a book of business here, and it will grow and grow. And where that book of business comes from will also shift over time. At the moment, the majority of it is from handhelds and consumer goods. And, as we go into 2025, 26, 27, the shift will be towards EVs. You can imagine the size of a mobile phone battery or a laptop battery and how much that weighs. And then you can imagine an EV battery and how much that weighs. Each EV battery is between the 500 and 750 kilos. So, this business will be dominated in the EV market going forwards. And that means we're dealing with extremely corporate entities, which is a slight departure from the traditional recycling market where you're getting sort of bits of recycling from all over the place. So we're dealing at the moment with car manufacturers, car dealers, insurance companies, major corporations, all of whom need to come and audit us. So this is what's been going on for the last few months, and this is where we see the dominoes starting to fall, as we've said before on this podcast.
Can you give an indication as to how many companies you're dealing with, or you'd rather comment?
We have 18 different verticals. I mean, we are dealing with hundreds of companies. Some of them are for a few kilos, and some of them are for over 1,000 tons. So there's really from the smallest to the largest. And the idea is we set ourselves up to be a problem solver for this country, and as such, we will deal with anybody who has batteries that need to be recycled. So that they need to.
So linked into the funding then is the new loan required to fund operation expenses, or is it to fund plans for Plant 2 or other capex? If it is a capex, are you able to give more details as to what it's being used for? I.e., you've mentioned about a machinery to separate the copper, new plant, new vape line.
Yeah, it's both. It's used for working capital until we become cash flow positive. And we made a statement just before at the AGM about the cash generation we've had in the company, and so we are starting to generate cash. But at the moment, we are still spending more cash than we are bringing in. This is no secret. And the idea is to become cash flow positive as soon as possible. But yes, there are also small capex items to improve our processes, improve recoverability. None of it is essential to the operation of the plant in terms of it will work without it, but we are constantly trying to improve what we do here and improve the value of our streams. So as you mentioned there, the copper. So it's a case of improving the quality of the copper that we produce, which gets us a higher value for it. So yes, it's both.
What is the current priority for the business? New plants, refining black mass, or anything else?
The absolute priority is getting Wolverhampton up to capacity, and then increasing the number of hours we work there. And then we have taken on just now Dr. Anwar Sattar from Warrant Manufacturing, who is heading up the science side of the business. And his first task is to look at all the various different black mass separation businesses that we're looking to do business with, potential joint ventures, and we will decide on which way we go. And some of it will be done in-house as well. So that is kind of being run alongside it, because obviously the UK needs that black mass separation technology, and also it gives us a value uplift on what we do. But it's always been key to us that we have not only being able to solve the problem of lithium-ion batteries in the UK and where they go, but to make sure that A, we get paid on the front end, and B, we've always had saleable streams on the back end. And so the black mass separation is just an extension of that, really. It's being able to create a value uplift and create the next stage of the process. So eventually we can feed back into battery manufacturing here in the UK rather than anything having to be exported.
think I would just add to that as well. Thank you, Alex. But I would just add to that the business plan is very clear and have been for many months, if not years. And that also involves rolling out a number of plants to be able to achieve a business plan. So in addition to all that Alex has explained, we are focused also on where the locations are, where the incentives are for the rollout of additional plants. Now, this isn't work you can switch on today and expect to roll a plant out in a month's time. There are permits which need to be dealt with, which we are dealing with. So all of that activity around, the construction of the manufacturing of the next plant, the location of the next plants, the licenses and permits within the time frame of the business plan, and all of these things are all going on simultaneously. Otherwise, we wouldn't be able to hit business plans. So, sure, the priority is we've got one up and running and we've got to leverage it, as Alex has said. But, there's a whole plethora of silos, if you like, that are being dealt with simultaneously, all the way from, how do we deal with local scrapyards with certain staff on board to get lead acid batteries as we go live with Tipton, for example, all the way through to working with board level members of OEM car companies and insurance companies. So, and everything in between, as well as looking at the future of the black mass as well. So all of these activities are going on, and it's a super busy place. And it's a super good place to work as well. And as the staff tell us often, no 2 days are ever the same. And I think that's a great place to be. So, there's so much going on, and it's very hard to be able to get that across to you as investors. We did get it across at the AGM, I believe. The 14 shareholders that were able to visit all left with a smile on their face and glowing with joy at the work that we've delivered so far. So, huge amounts of work going on in all of those silos.
I'd just like to comment about the AGM. I wasn't able to make it, but the feedback that we had within the Telegram group was it was exceptional. They were very, very happy.
Thank you.
Everything that went through, the explanations, the business plan, and the projections going forward. The discussions about the new vape line and where you could see the business going, and seeing the machine actually working. So I think there were 2 people within the Telegram group, and they were both glowing.
Thank you. That's kind of you to say. Thank you.
So following up about the second plant, which is sort of linked into what you just covered, when do you think a second plant can be up and running? What is the timeline to order and install the plant? And is the expectation that permitting, commissioning, the stroke ramp up will be faster based on the cookie cutter model?
To your very last point first, if I may, Alex, I can't go into too much detail, but what I can tell you is that that it takes 6 to 8 months for us to fully build and commission a new plant. And we're now in a position where one of the locations, it will take us longer to manufacture the plant than it will to get the permit.
Okay, that's encouraging. Okay.
Yeah.
Right, so I think that covers the first section. So the next one is, which you have sort of touched on already, is black mass and black mass refining. So rather than giving you lots of questions in one go as I did last time around, I'll break it up. So can we get an estimate for the due date to the black mass transport licence? How long should this process take? And is the government support for refining a possibility, given that it will benefit wider UK manufacturing and vehicle exporting into the UK? If it is, are you able to indicate how much funding may be available?
So the TFS is a trans-frontier shipment license, generally take about 12 weeks. And we are still in that process with a major corporation. And the major corporation has asked us to ship the black mass to one of their newer facilities. And it's that's taking us a little bit longer because we have to rely on them giving us the full journey of the material when it lands in the country of destination. So until they're able to give us, because we have to evidence that if we ship something from the UK, that we have absolute knowledge, and the Environmental Agency has absolute knowledge to the very end of its life, where it either finishes its life or it actually becomes another product, if you like. So that journey has to be documented from our door all the way to that becoming another product. And by that, what we're saying here is separating so that, for example, if it becomes cobalt or nickel that can be used again into making something new, hopefully a new battery, then at that point, that's the end of its life. So we are in the hands of a major corporation that will be very newsworthy when we're able to declare that. But at the moment, we are looking at selling the black mass that we have through intermediaries that have already got their own TFSs established from the UK. So that's something that we expect will happen now through this month. You know, we've got several tons of black mass that will, we believe, go through a UK intermediary with their own TFS in place. So revenue for that won't be quite as high, but yeah, we'd rather get it right. A TFS is not a cheap thing to do, just so you're aware, because you have to put a bond, several tens of thousands of pounds of bond in place for every TFS. So even if we've got a major corporation, they want us to send to 3 places, you have to have 3 bonds in place, you have to have 3 TFSs, and so it's not a cheap thing to do. So we'll give you more updates on that as and when we've got it, but nothing to be fixed in January, let's say. But certainly we'd like to think that we can get some news out by the end of Q1 on that.
Is there a limit to how much black mass can be stored on site?
No. And we can, if ever we get full, where we can take some to Tipton, for example.
How far along are you in your quest to have a black mass processing facility in the UK? Are you able to give approximate timelines as to when you expect this investigation process and have to complete? And how long do you think it would take to build a plant and the order of magnitude for the costs? So if you're going to go down and do your black mass refining, do you envisage that being on a single plant, or would you do some of it at each plant?
Okay, so I think first of all, let's just talk about what is out in the rest of the world for a moment. So what we're not going to do, because the numbers simply don't stack up, is if you look at the investment that people like Glencore have put into Europe, for example, it's around 700 million, and they wish to process around 80,000 tons of black mass a year. So pop one of those, for example, into the middle of Europe, and you've got a hub and spoke scenario, then you've got a potentially viable business model. Bring that level of investment into the UK, and frankly, it wouldn't last a year before it went pop. And, it's going to be some time before we get to 80,000 tons of black mass for such a facility. So by default, what we've been doing over the last 2 years is looking at other world processors or other processors from around the world that are using different types of technology to produce the same result, but on a smaller scale. And so one line, for example, on some of the technologies that we're looking at, most of them are around a 10 million investment. Some are offering their plant where there's no capex for us, but we have a form of joint venture. So, of course, as business people, we are looking at all of those options. This is one of the reasons we've brought Anwar on to the team, is because he will be leading and is already leading the direction of travel that we should go. And we may even take more than one of the solutions, because each of these smaller lines at this sort of 10 million mark are only capable of doing processing around 1,000 to 2,000 tons of black mass a year. So by default, we're going to more than exceed that. So it doesn't stop us from having deals in place to say, if we're going to run 2 or 3 or 4 of those lines in the near future, if we've still got surplus, we can still sell that surplus to other people around the world. So we've always got an outlet for it. It's a question of making sure that we've got the right technology at the right business model price. And with Anwar's decades of knowledge and development in this field, our target actually is to get true cradle to cradle, where we can process the black mass to such a point that it's pure enough to go back into the front end of battery manufacturing. And the relevance for that, I'm sorry to widen this, but the real relevance of that, where the value is then when you look at the gigafactories here in the UK, okay, a car company has to produce a car with a certain level of carbon footprint. Otherwise, it's not allowed to export a car because it's not classed as local production. So at the moment, with China being the single biggest country of manufacturing batteries in the world and biggest single supplier to the automotive space, raw material is extracted in Chile or Australia. It's shipped to China. It's produced into batteries that are then shipped to the UK to be put into a car. And that they weigh roughly half or more of the total car now of an EV. So the carbon footprint of that is huge, to the point where the European Union finally agreed that the UK could push out the timelines to hit certain carbon footprints. Otherwise, it would have stopped our cars that are manufactured here from being sold around the world. So that's a long story to say, by us recycling and in the UK and us separating the black mass here in the UK, we have got a hugely reduced carbon footprint product that can actually go back into the new JLR factory, the Nissan factory, other gigafactories here in the UK, or even nearby Europe, with a significantly reduced carbon footprint. So its value actually is bigger than, can you just do it against a metals market? It's actually all part of the eco-structure of the whole automotive future strategy around EV.
So last question on the black mass is, in the early days, you were predicting roughly 5,000 tonnes of black mass to be created from the 8,000 feedstock. So roughly 62%. You're currently generating roughly 45% black mass, I believe, from the feedstock. Is that the maximum that you think you're going to get, or is that just a temporary threshold until the mixture of the battery feedstock changes?
The 45% is still where we're targeting for 2024. As we are processing right now, as you would expect with engineers, we are reviewing alterations to our existing plant because of more learning, of course. And so we will expect plants 2 onwards, through constant learning, constant revision, constant engineering, to actually get nearer to that figure that you mentioned.
I think another couple of questions we sort of covered anyway, which is why are you short on feedstock, considering there is so much out there? You would think people want to ship potentially dangerous stock, but obviously you've explained your negotiations already.
Well, let me also just touch on this, because clearly, many of your group will be business people. So, we want to do 8,300 tonnes. There's a market opportunity of 82,000 tonnes. Forgive me for using a round figure. We want roughly 10% of the market, yeah? So by default, we're going to have to turn away around 90% of it. So in our business plan, we've declared that we're going to get a gate fee of X over each year effectively. And we can take feedstock tomorrow at a 0 gate fee if we choose to do so, yeah? But it's not going to hit business model, because we've got a fee that we want to put in there. So in addition to all of the elements that Alex mentioned earlier on in the interview, we're in a situation where we only need 10% market share to deliver the business plan for the shareholders. Of course, we're targeting a lot more than that. And of course, we will take whatever comes at us until we're absolutely at capacity. Of course we will. But right now, as business people, we are making sure that as the quotes are going out, that we've got a gate fee that is consistent, because you'll know as a businessman that the minute you actually offer a discount anywhere, it becomes the new norm. So we're holding firm on the gate fee to get 10% market share. So that is what we're actually currently doing in the position we're in, because we could easily swamp the place with batteries, but we're then going to be talking to you in 4 months' time saying, guys, we've produced all this material, so sorry, but the gate fee's gone and there's X amount of millions out of the business plan. We're not going to do that. That is the stance that we're taking to deliver against plan.
So when do you envisage increasing the throughput at the Wolverhampton plant from 1 shift to 2 shifts and then 3 shifts?
I'd say about the middle of the year. We're looking to go to 2 shifts. And then there's quite a lot of logistics that go into that. So obviously you're dealing with some very serious tonnage through the plant at that point. And so there's a period of learning through that as well, and stability. And then I think we'll be looking towards the end of the year, beginning of next year, to extend beyond that.
Your permit is for 22,000 tonnes. So you've mentioned at the AGM or a recent interview, I believe, that you may be targeting more like 5 tonnes an hour. So 5 tonnes an hour at you're running 3 shifts, and would equate to something more like, I believe it's 30,000 tonnes a year. So would you be looking to get a variation on the permit to allow you to do that level?
No, I don't. I don't think we'd ever get that level of throughput through the site. There's also maintenance time, there's downtime, it would just be a massive logistics operation at that point. And it already is. I think by that point we'll be onto sites 2 and 3, and the idea is to spread throughout the country as well, rather than just have everything coming to one site. It's an awful lot of lorries coming in a day, which is a lot for the locality as well. So we look to sweat that asset as much as possible, but not beyond. It's what we think it could do.
So that really covers off another question, which was previously mentioned by 2025 regarding full shifts. that is a bit ambiguous. So do you envisage the start or the end of 2025? But it sounds like you're targeting the early part of 2025 to be up to running the 3 ships at the Wolverhampton plant.
Yeah, absolutely.
And also to have second plant very nearby running as well.
Yep.
In Q1.
Oh, really? Okay, that's okay. That's sooner than I would have expected. So when do you expect to be able to process car batteries? What needs to happen for you to be able to do this?
Yeah, at the moment we break down entire packs into modules, but we do that, and then we go through.
Next section is the RTO. Can you talk us through the RTO process? Is it like a relist or just a rebrand of TM1 into RG1? So will TM1 be delisted and RG1 be listed like an IPO, and the market makers will be setting a price, or will it just adopt the share price from TM1 on the next day of trading?
That's a good question. It kind of happens all in the same day. There is a halt in trading and a restart in trading, but it all happens in the same day fairly seamlessly. It is essentially a rebrand of the company, yes. And the market makers will then decide a price as well, yes, because obviously you've got a much enlarged share capital.
Right, okay. There was an expectation the RTO would take place December 23, January 24.
Yeah.
Is the delay in the RTO due to TM1 wanting to get the maximum benefit out of the new listing and wanting to put contract information into the prospectus, or is it because TM1 still need to provide information answers to the FCA, or are there other reasons?
No, the FCA is not holding this up at all. This is us wanting to get as much of the building blocks in place to have a unified group as possible. And one of those requirements is to have a clean working capital statement. As I said at the beginning of this, when you do a reverse takeover, you need to show that the group has enough working capital to run for 18 months. So that's one of the other reasons we put this facility for 5 million in place, which is to be able to show that should we need it, there is working capital enough, not just through our run rate, because in order to, when they're looking at this, we'll obviously look at what cash you're generating, but you guys know what cash we're generating roughly to date, and then coming into Q1 we start to hopefully generate quite a lot more cash, but that's not going to be enough for in order to look at this and go, you have enough working capital as a run rate here to meet your working capital requirements going forward. So it's useful to have facilities in the background that they can look at and go, if they need more money, they can draw more money. So that's what gives the tick in the box. So there's been a lot of things we've wanted to do to get into a position where we've actually wanted to complete this RTO, and would say we've pretty much got there now. So now it's just finalising the prospectus.
So last point on the RTO is, there are some people, no name mentioned, in the market that believe the prospectus for the RTO will never get approved. Can you please comment on where you are with it and how quickly you think it will be made public for investors to review?
We are on, I believe, the 4th turn of the prospectus. Go back in again this month. We've had absolutely no feedback from the FCA at all that would make us believe that they have any issue with it, and we've answered every question successfully, and every question has then been dropped because they give you a list of questions and you tick them off as you go. They do come up with new things, but as I said, there's been absolutely nothing in there that leads us to believe they're not entirely happy with the process of what we're trying to achieve here. And in terms of being in a position to have it approved, an EGM will be convened, but we're looking still in Q1, so and it'll go out to investors at that point.
And Keith, just to add to that, to give you perhaps a little more comfort, is that part of the standard process for this is that as soon as we have answered all of the questions, as Alex has just described, the document then goes to a second person from the FCA who independently then starts afresh and reads again to see if there's any more trawling for any more questions. So it can be quite normal to think that you are completely across the line. The document then goes to the second reader, and the second reader has a different interpretation perhaps of some of the wording and needs to have clarity again. So it can be quite often the case that you then get a fresh set of questions that then get answered. So this is all part of the true process with the FCA to make sure every I is dotted and T is crossed.
And we had that with the IPO. It was not a short process getting the prospectus through the IPO, but you wouldn't expect it to be either. But that prospectus was approved, and this one is the basis of that one's the basis of this new one. So and we're a long way into it now.
So you are still comfortable that Q1, at the end of Q1, the RTO will be completed.
We are. That's the target.
Next section is warrants. What was the rationale for giving the warrant holders such a short timeline, i.e. the extension to the end of January, and then the additional announcement in the RNS today about the 1 week window, which obviously, based on the reaction to the RNS today, we're not envisaging anybody converting warrants at the current share price.
Yeah, it's a difficult one, this. I mean, it's essentially the warrants were given to shareholders originally as a potential upside, coming into the IPO. You never know where the share price is going to go. We've done, we've spent the last few years building the first industrial scale lithium-ion plant in this country. You cannot tell how the market's going to value that. We feel that it's misvalued, but we're hoping that as the cash comes through this quarter, there will be a re-rate, especially after the RTO. So the warrants were due to expire in November. Yeah. We felt that the warrant holders potentially weren't in receipt of all the information that would give them enable them to make a decision as to whether they wanted to put more money into the company. And obviously the warrants were out of the money at that point. So we extended them into January, and we didn't particularly expect the share price to be above the warrant price. We're here to make an offer on the basis that all the shareholders have got all the information. They can see that the RTO is just on the horizon. They've been to the AGM. They can see that the company is starting to generate cash, and so they're in receipt of all the information. And it's up to them as to whether they would then want to reinvest. When we also put the strike price in for the exercise price, it was 20% below the market price, which we thought was a reasonable discount. Obviously, that's come off today, but it's always going to. If we put the strike price at a penny, the share price today would be a penny. So it's a very difficult balance to create. We wanted to try and offer something to the warrant holders without them just expiring. But it's a difficult balance.
Yeah, there was a view that the warrants being extended for only a short period was to clean up the share register. However, there is a large number of outstanding warrants for the directors, significant investor, and now the bond issuing company. All of these warrants will still be there when the RTO happens. The exercise price for the above three entities is much lower than that for the private investors, many of whom have been invested for several years now. Is there not any thought that the warrants could be extended for the pre-IPO and the IPO investors to give them a reasonable timeline to be able to exercise in the future? I have given an extension from November to the end of January, where the share price was only 1.2, 1.3 during November. It was unlikely that anybody would be in a position where they would buy, or would trigger the warrants rather than buying on the open market. So have you got any thoughts about extending the warrants further, or you do not comment at this point in time?
Coming into the RTO, I mean, the point you made at the beginning is valid. We are trying to bring on we're trying to grow this company, and post RTO we'll obviously have twice the share capital out there, and we're hoping to get the share price up, so we end up with a much larger market cap, which drives institutional investment and helps take us to the next level. In order to do that, having very, very large numbers of warrants on the share register does make it tricky for institutional fund managers to look at. So, but I do take your point that there's other CLNs we've done since have had warrants, but none of them are extended beyond 2 years. So these were the warrant period did come to an end. We have made an offer to the warrant holders, and so no, I don't think we are minded to extend it any further. I mean, as I said, we do have warrants in the pipeline not for the directors. The directors don't have warrants, but they.
You've got the options there for 250. You've got about 250 million options, I believe.
We do have a long-term incentive plan for directors and for management. Yes, but they're not.
I think the strike price is about 3p, 3.5p for 10 years. So that's actually the impression for shareholders is that the terms which have been handed out to the directors are very favourable for 10 years, and there doesn't seem to be a willingness to consider the seed investors, and giving a very short extension has not been particularly well received. So I'll leave that with you. I'd like you've explained your position, and you may want to ponder on that and think about where you go. Okay, right. Next topic is, I'm aware we've taken a long time. So the next topic is lead acid. How is the commissioning of the new lead acid plant coming along? when do you expect to be running at, say, 50% capacity or 100% capacity?
Coming along, focuses on lithium-ion. We've got the team working on it. We are commissioning at the moment. We expect to be generating cash in the end of February, and we expect to be probably at 50% in March, and I'd say about another 2 or 3 months before we're nearing 100% after that.
That was short and sweet. Next one is portable trucks. How is the development of portable trucks progressing? When is it realistically expected to lead to an actual operational truck? And what kind of revenue do you think the trucks could generate?
Okay, so you're talking about the recycling dustbin lorries, aren't you, that we're looking at? The answers in this order: work is still progressing well. We are still able, of course, to be claiming money. We got a 1.96 million grant for that project, and we claim quarterly. So we are getting revenue to cover that. The design of the truck is now probably 75% there. So by design, let me be clear, we're not talking about the ergonomics of the exterior shell here. We're talking about what goes inside the truck. So the design of the engineering part of the truck is what I'm referring to. So please don't expect something looking like a Ferrari or a Tesla coming out the other end right now. We haven't quite got that far yet. But we are being encouraged to already look at iterations of this. So on one of the major sectors that we had a good conference with today, for example, they are saying that some of their sites have already got actually the correct levels of permits for us to process on, and therefore they wouldn't need it going into a truck. They'd just like it to be in a sea container of some description, for example, so that it could be a permanent, movable, opportunity for them on their site as they strip down the batteries. All the way through to delegations that have come over from India, where they believe that the lorry will be a real win for them in the provinces in India, because lithium-ion batteries, are not currently being paid for and are going to landfill, whereas the truck itself would lend itself to paying a number of rupees, for example. So as the 1.5 billion people that they have there are tipping their laptops in the bin, for example, but the battery is going to landfill. So we've got opportunity there. When it comes to the commercial, so from an engineering point of view, progressing very nicely. We've got all the designs there. We're literally now, later this week, ordering the raw materials to start bringing in the manufacturing of that. And our engineering site, about 1.5 miles down from Wolverhampton at Willenhall, is got the engineers ready to start the fabrication of that plant. So all of that engineering side is actually ahead of schedule. The business model, to be perfectly frank, is not set. We don't know whether yet we're going to be selling the IP of this. We don't know yet whether we're going to be doing this ourselves and manufacturing in containers, let's say, that go inside other people's vehicles, or whether we're going to get hold of an existing dustbin lorry manufacturer and say, hey, can we do a JV of some description? So all of that is still on the table because it's so new. And I don't know whether you saw the BBC articles through the Christmas break, but there was a big feature of curbside collections now. And we know that over 80 councils, for example, have now done trials for 6 months or more of collecting small household electrical items that this machine would be able to handle at the curbside. So what we predicted is coming through from a political point of view. The drive to get consumers to be more responsible and to recycle more is coming through, and we're beautifully placed for that. We've got to leverage that, and it's not in the original business plan, and we don't yet have a clear focus on what revenue streams will be coming from it. It feels like we've got a winner. It's being paid for predominantly through the grant scheme, so it's not costing shareholders money to develop, and you're going to have to trust us to really leverage the commercials on this as we now are getting all of these opportunity strands coming at us.
Okay, and next section is halo boxes. So how many have been sold so far? How many do you think you can realistically sell a stroke lease? And how much revenue do you envisage being generated from the halo boxes?
We've got over 100 halo boxes in operation. We've had the first dealer group that we released the news on actually use them. We did present to an organization called the National Franchise Dealer Association. in London back in Q4, end of Q4 last year, and they represent roughly 4,500 car dealerships and accident repair centres. So all of those dealerships and their members have been made aware of what we have, and they've got copies of it, and we are now getting inquiries from large dealer groups. So, for example, at the end of last week, we had one dealer group with 92 outlets that are now in deep discussion with us, in advanced discussions with us around boxes for all of their sites. So for us, as well as the Halo box and what we do with either leasing, selling, renting those boxes, all of those business models are available. Our real win, of course, is also then to get the batteries back to site to be able to process the batteries. So there's a whole range of commercial discussions going on around how we achieve that on an exclusive basis in many cases, is where we've pitched it. So those commercial discussions are ongoing. Revenue-wise, we will be, I believe, very shortly in a position of continuing manufacturing 25 a week very shortly. And we will expect all of those units to be used in some form or another, be that a sale or a rental, as we get towards Q2.
I believe you mentioned before in the past that the expected price of a box was roughly £8,000 or £9,000.
8,000 plus 1,000 for the pillows that you put in them. Yeah.
Do you envisage that will ever get to having its own site?
Well, we've separated it off into Li-Box Limited, so it's 100% owned subsidiary of Recyclus Group, as we have done Halo for lead acid and as we have done for Libat. So we've deliberately kept all three companies 100% owned, of course, but separate. And the boxes are manufactured off-site at the Willenhall Fabrication Centre. Yeah, it's something that we see through this year, frankly, having a wider range. We're asked almost weekly by somebody, can we make it this size, this size, this size? And some of them are wanting full car floor pans, for example. But, at that level of kilowatt per hour, you're looking at a bomb, really, that you're transporting. So it isn't the work of a moment. And, we expect to have a range of boxes with a range of kilowatt hours by the time we talk to you this time in a year's time. But trying to establish, because each car company, each insurance company have got their own requirements. What we are also looking at doing, incidentally, because of huge demand, is that what has caught us out is that we've assumed that the people that are swapping these batteries in cars have got the technical expertise on site to then strip them down to put them into our boxes. But that's actually simply not been the case. We've got a lot of opportunity with people that can't move them from their sites because they haven't got the packing for them, but they also don't have a high voltage engineer on site to strip them. So they're stymied. So they're stacking up. Yeah. So we've embarked now in Q1, what we're describing as a flying doctor, let's say, of bringing on our own high voltage engineers that will, or engineer in the first instance, that will offer this service at a cost, will offer a service to go and break those full floor pans down into their individual modules. And there's clearly a big gap in the market for that. And we didn't see that coming. We made an assumption that if somebody was trained enough to take a whole battery pack out and put a whole new one in, that they would have qualification enough to separate them. And it's not been the case.
Okay, that's great. So you'll be pleased to know this is the last section. It's a government battery strategy. So when will the new government battery strategy be implemented? When will it become a requirement for new batteries to have recycled materials like it is in the UK? Do you have any thoughts on that?
It's already in place.
Well, it is. Okay. Right. Thank you. Well, that covers all of our questions. I'm sorry it's taken so long of your time, but I think it's been, for me, I found it daily assuring, and I think hopefully when this goes out, I'm sure that most of the investors will be quite pleased with that. So thank you.
Thank you.
Yeah, thanks for your time, guys. And as a recap, I would just say to you that to the investors in general, to answer a lot of the questions today, the £5 million that has been not taken but available to Tech Minerals is partially to make sure that the RTO can pass all the requirements that it needs, and secondly, to give stability to a business so that it can execute its plan, which is basically to get cash going in, cash going out in terms of all of the batteries. There are so many different ways that you can make revenue, that I think will appear, and even new ones, as you've suggested in this talk today, over the next 12 months, that it's definitely exciting times ahead. Yeah, I think, even the ability to purchase shares at 1.2, there is no possibility that you could buy several million shares at 1.2 on the market right now, because you would push the price back up again. So,
Kevin, can I just add to that as well?
Yeah.
That if the investors do really enjoy the journey that we're on and want to come on board at this lower level, the warrant offers, anybody that buys the warrants is giving us more cash to do more with the business. Whereas if they buy them in the open marketplace, it doesn't advance the business.
Yeah. Again, extremely valid point that if you really do want to forward the business, then adding the cash to the business means probably less of that 5 million is going to be used, and therefore less dilution in that case, and more power to your arm in terms of what you're going to be able to do. Now, obviously, it's a choice. It's not going to make you money straight away, but I think down the line with the RTO and all the different things that are going to happen over the next period of time, now that you're cashed up and ready to go, I think the batteries themselves over the next period of time should more than give you cash flow to cover your overheads and more. So yeah, good luck, guys.
Thank you.
I can see you put yourself in a great position now, and I reiterate again, it is one of our stocks of 2024, and we stand by that wholeheartedly, and we think you're in a better position now than before you had this ability to take this money. So that's great.
Yeah, I want to say thanks, Keith, as well, for coming on behalf of the shareholders in the group and putting those questions to the board. It's great. It's saved us a job as well, which is good. We've put our feet up for the last hour, so thanks very much. And on that note, we'll say Robin Brundle, Alex Stanbury, and Keith Hinde, thanks very much for your time.
Thank you.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.